Bitcoin. The very word sparks curiosity and debate. It represents a fundamental shift in how we think about money and finance. Created in 2009, Bitcoin is a decentralized digital currency. It operates without a central bank or single administrator. Transactions occur directly between users on a peer-to-peer network. This groundbreaking technology, known as blockchain, ensures transparency and security. Bitcoin's journey has been marked by volatility and remarkable growth. Early adopters recognized its potential, investing early on. Today, Bitcoin has captured the attention of institutional investors, corporations, and even governments. Its limited supply and growing adoption have fueled its price surge in recent years. As more people recognize Bitcoin's potential, its popularity continues to climb. This digital revolution is reshaping the financial landscape. Bitcoin's decentralized nature challenges traditional notions of currency and control. It empowers individuals, offering an alternative to centralized financial systems. This paradigm shift has not gone unnoticed. Governments around the world are paying close attention to Bitcoin's rise. Some governments have embraced Bitcoin, recognizing its potential to transform their economies. They see it as a hedge against inflation and a way to diversify their reserves. Others remain cautious, grappling with the regulatory and economic implications of this new asset class. The entry of governments into the Bitcoin market marks a pivotal moment. It signals a growing acceptance of cryptocurrencies on the world stage. Countries like El Salvador have taken the lead. They adopted Bitcoin as legal tender, integrating it into their financial systems. This bold move sent ripples through the global market. Other nations are exploring different approaches. Some are accumulating Bitcoin in their reserves. They see it as a strategic asset in an increasingly digital world. The motivations behind these decisions are complex and multifaceted. They range from economic considerations to geopolitical strategies. This government involvement injects a new level of intrigue and complexity into the Bitcoin narrative. It raises crucial questions about the future of finance and the role of traditional institutions. How will these government actions impact Bitcoin's price in the short and long term? What are the potential risks and rewards for investors navigating this evolving landscape? This essay delves into the fascinating world of Bitcoin and the impact of government involvement. We will explore the current state of Bitcoin investment and the motivations driving government adoption. Join us as we analyze the potential consequences of these actions, examining both the opportunities and challenges that lie ahead. The Bitcoin investment landscape is a diverse and dynamic ecosystem. Early adopters, often tech-savvy individuals, recognized Bitcoin's potential in its infancy. Driven by a belief in the power of decentralized systems, they invested early on, acquiring Bitcoin at fractions of its current value. Their foresight has been handsomely rewarded, turning some into millionaires and fueling the legend of Bitcoin's extraordinary returns. As Bitcoin gained notoriety, its investor base expanded. Retail investors, drawn by the allure of high returns and the ease of access through cryptocurrency exchanges, entered the market. They represent a broad spectrum of individuals, from seasoned traders seeking to capitalize on price fluctuations to those making their first foray into the world of digital assets. This wave of retail investment has been a major driver of Bitcoin's price appreciation. The collective buying power of individual investors, particularly during periods of market exuberance, has propelled Bitcoin to new heights. However, this enthusiasm can also contribute to market volatility, as price swings are amplified by the actions of a large number of individual market participants. Despite the growing prominence of institutional investors, retail participation remains a crucial element of the Bitcoin ecosystem. These individuals, driven by a mix of financial aspirations and ideological convictions, continue to shape the market's trajectory. Their presence underscores the accessibility and democratic nature of Bitcoin, allowing anyone with an internet connection to participate in this global financial revolution. While retail investors initially dominated the Bitcoin market, the entry of institutional investors marked a turning point in its evolution. Hedge funds, asset management companies, and corporations began to recognize Bitcoin's potential as an alternative asset class. Their interest brought with it a new level of sophistication and capital, further legitimizing Bitcoin in the eyes of traditional finance. One of the most significant developments was the launch of Bitcoin futures contracts on major exchanges like the Chicago Mercantile Exchange. This provided institutional investors with a regulated and familiar way to gain exposure to Bitcoin without directly holding the underlying asset. The availability of such instruments signaled Bitcoin's growing acceptance by mainstream financial institutions. The arrival of institutional investors has had a profound impact on the Bitcoin market. Their large-scale investments have injected significant liquidity, making it easier to buy and sell large amounts of Bitcoin without dramatically affecting the price. This has contributed to greater market stability and reduced volatility, attracting even more institutional participation. Moreover, institutional investors often bring with them a long-term investment horizon. Unlike some retail investors who may be more prone to short-term speculation, institutions tend to view Bitcoin as a strategic asset to hold for extended periods. This long-term perspective can act as a stabilizing force in the market, dampening the impact of short-term price fluctuations. The Bitcoin market is characterized by its constant state of evolution. New technologies, regulatory developments, and macroeconomic trends continuously shape the investment landscape. Understanding these dynamics is crucial for investors seeking to navigate this complex and rapidly changing terrain. One notable trend is the emergence of Bitcoin exchange-traded funds, or ETFs. These investment vehicles allow investors to gain exposure to Bitcoin through traditional brokerage accounts, further lowering the barriers to entry. While the United States Securities and Exchange Commission, or SEC, has yet to approve a spot Bitcoin ETF, several futures-based ETFs have been launched, providing investors with another regulated avenue for Bitcoin exposure. Another significant development is the growing interest in Bitcoin from corporations. Companies like MicroStrategy and Tesla made headlines with their substantial Bitcoin purchases, adding the cryptocurrency to their corporate treasuries. This trend reflects a growing belief among some corporate leaders that Bitcoin can serve as a hedge against inflation and a store of value in an uncertain economic climate. However, the Bitcoin market is not without its challenges. Regulatory uncertainty remains a significant concern for many investors. Governments around the world are grappling with how to regulate cryptocurrencies, and the lack of clear guidelines can create volatility and discourage investment. Additionally, security breaches and scams continue to pose risks, highlighting the importance of investor education and due diligence. The small Central American nation of El Salvador made history in 2021. It became the first country to adopt Bitcoin as legal tender. This bold move, spearheaded by President Nayib Bukele, sent shockwaves through the global financial system. It signaled a willingness to embrace Bitcoin's disruptive potential on a national scale. El Salvador's decision was driven by a desire to address long-standing economic challenges. With a large unbanked population and heavy reliance on remittances, the country saw Bitcoin as a way to promote financial inclusion. They believed its low transaction fees and fast settlement times could benefit citizens, particularly those receiving money from abroad. The move was not without its critics. The International Monetary Fund, or IMF, raised concerns about Bitcoin's volatility and potential risks to financial stability. Domestically, some citizens expressed skepticism and concerns about the practicalities of using a digital currency in their daily lives. Despite the challenges, El Salvador remains committed to its Bitcoin experiment. The government launched a digital wallet called Chivo Wallet, aiming to facilitate Bitcoin adoption and provide financial services to the unbanked. It also announced plans to build a Bitcoin city, powered by geothermal energy and envisioned as a hub for cryptocurrency innovation. While El Salvador took the unprecedented step of adopting Bitcoin as legal tender, other countries have chosen a more cautious approach, accumulating Bitcoin in their national reserves. This strategy reflects a growing recognition of Bitcoin as a potential store of value and a hedge against inflation, particularly in an era of unprecedented monetary expansion. One notable example is Ukraine. In the midst of the 2022 conflict, the Ukrainian government received millions of dollars in Bitcoin donations from around the world. This influx of cryptocurrency provided a lifeline, enabling the government to purchase essential supplies and support its defense efforts, showcasing the potential of Bitcoin in times of crisis. Other countries, including Bulgaria and Finland, hold significant Bitcoin reserves, albeit acquired through different means. These reserves are often seen as a strategic asset, diversifying away from traditional reserve assets like the US dollar and gold. This approach reflects a growing concern among some nations about the long-term stability of the existing global financial system. The decision to hold Bitcoin reserves is not solely driven by economic considerations. Geopolitical factors also play a role. Some countries, particularly those facing sanctions or excluded from the traditional financial system, see Bitcoin as a way to reduce their dependence on the US dollar and assert greater financial independence. Section 3. A spectrum of approaches. The approaches governments take toward Bitcoin are diverse and constantly evolving. While some are embracing it as a tool for financial innovation and inclusion, others are proceeding cautiously, exploring its potential while navigating the regulatory and economic complexities it presents. Switzerland has emerged as a hub for cryptocurrency businesses, fostering a favorable regulatory environment that has attracted blockchain companies and investors. This proactive approach has positioned Switzerland as a leader in the development of the cryptocurrency industry. In contrast, China has taken a much stricter stance, cracking down on cryptocurrency exchanges and mining operations. This move reflects concerns about financial stability, capital flight, and the potential for illicit activities. China's actions underscore the challenges governments face in balancing innovation with regulatory oversight in the rapidly evolving world of cryptocurrencies. The United States, with its fragmented regulatory landscape, presents a complex picture. While some states, like Wyoming, have embraced Bitcoin-friendly regulations, others remain cautious. The SEC's reluctance to approve a spot Bitcoin ETF highlights the ongoing debate about how to regulate cryptocurrencies within existing financial market frameworks. As governments continue to grapple with the implications of Bitcoin and other cryptocurrencies, their actions will have a profound impact on the future of this emerging asset class. Understanding the diverse motivations and approaches of governments is crucial for investors seeking to navigate this evolving landscape. Section 1. A hedge against uncertainty. The global financial landscape is in a state of perpetual flux. Traditional economic systems face mounting pressures from soaring inflation to geopolitical instability. Governments are increasingly seeking alternative assets to safeguard their financial sovereignty. Bitcoin, with its decentralized nature and limited supply, has emerged as a compelling option. One primary driver behind government interest in Bitcoin is its potential as a hedge against inflation. Unlike fiat currencies, which can be printed endlessly by central banks, Bitcoin has a fixed supply capped at 21 million coins. This scarcity appeals to governments grappling with inflationary pressures, particularly in emerging markets where currency devaluation is a recurring concern. Furthermore, Bitcoin operates independently of any central bank or government control. This decentralized nature makes it resistant to the political and economic pressures that can impact traditional currencies. For governments facing sanctions or operating in volatile regions, Bitcoin offers a potential lifeline, allowing them to transact internationally without relying on the traditional financial system. The 2008 financial crisis eroded trust in traditional financial institutions and highlighted the vulnerabilities of centralized systems. Bitcoin's decentralized architecture, transparency, and cryptographic security have led some governments to view it as a more resilient and trustworthy system, particularly in times of economic uncertainty. Section 2. The allure of financial innovation. Beyond its potential as a store of value, Bitcoin represents a technological leap forward. Its underlying blockchain technology has the potential to revolutionize various aspects of governance and finance, attracting governments eager to harness its transformative power. One area of significant interest is financial inclusion. Billions of people worldwide lack access to basic financial services. Bitcoin's accessibility, requiring only an internet connection, presents an opportunity to bank the unbanked and empower individuals excluded from traditional financial systems. Governments see the potential to leverage Bitcoin to promote economic growth and reduce poverty. Blockchain technology, the backbone of Bitcoin, offers numerous other applications beyond digital currency. Its ability to create secure and transparent records has piqued the interest of governments exploring its use in areas such as land registries, supply chain management, and digital identity systems. By streamlining processes and reducing bureaucracy, blockchain has the potential to enhance efficiency and transparency in government operations. Moreover, the rise of Bitcoin has spurred innovation in the broader cryptocurrency and blockchain space. Governments recognize the need to foster a regulatory environment that encourages responsible innovation while mitigating risks. By embracing this technological frontier, governments aim to attract investment, create jobs, and position themselves at the forefront of the digital economy. The US dollar has reigned supreme as the global reserve currency for decades. However, its dominance is being challenged by a confluence of factors, including rising national debt, geopolitical tensions, and the emergence of alternative currencies like Bitcoin. The weaponization of the US dollar through sanctions has left some nations wary of their reliance on the US-led financial system. Bitcoin, operating outside the control of any single country, offers a potential avenue for nations seeking to reduce their dependence on the dollar and assert greater financial sovereignty. Furthermore, the increasing digitization of the global economy is reducing the need for traditional intermediaries and cross-border payment systems. Bitcoin's borderless nature and fast transaction speeds make it an attractive alternative for international trade and finance, potentially chipping away at the dollar's role as the primary currency for global commerce. While the US dollar's status as the global reserve currency is unlikely to be displaced overnight, Bitcoin's emergence represents a long-term challenge to the existing financial order. Governments are closely watching these developments, recognizing the need to adapt to a rapidly evolving global financial landscape. The entry of governments into the Bitcoin market introduces a new layer of complexity and uncertainty. While the potential benefits are significant, governments must also navigate the inherent risks associated with this nascent asset class. Volatility remains a primary concern. Bitcoin's price is notoriously volatile, subject to wild swings driven by market sentiment, regulatory news, and macroeconomic trends. This volatility poses challenges for governments seeking to manage their reserves and could impact the stability of their economies. Regulatory uncertainty also creates challenges. Governments are grappling with how to classify and regulate Bitcoin, with approaches varying significantly across jurisdictions. The lack of clear and consistent regulations creates uncertainty for businesses and investors, potentially hindering innovation and adoption. Moreover, the environmental impact of Bitcoin mining, which requires significant energy consumption, has drawn criticism. Governments are under pressure to address these concerns, potentially leading to regulations or restrictions on mining activities, which could impact Bitcoin's price and availability. Despite these challenges, governments are increasingly recognizing that they cannot afford to ignore Bitcoin's transformative potential. As they navigate this uncharted territory, their actions will shape the future of this emerging asset class and its impact on the global financial system. Government announcements of Bitcoin purchases have had a noticeable effect on its price. The cryptocurrency market, hypersensitive to news and speculation, often reacts swiftly to such pronouncements. A surge in price often follows these announcements. This is driven by a combination of factors including increased media attention, speculative trading, and a perception of legitimacy bestowed by government endorsement. When El Salvador adopted Bitcoin as legal tender, the market reacted with enthusiasm. Bitcoin's price experienced a significant surge in the days and weeks leading up to the official adoption date. This surge demonstrated the market's sensitivity to government policies and the potential for official recognition to drive demand. Similarly, announcements by corporations like Tesla and MicroStrategy about adding Bitcoin to their balance sheets triggered price rallies. While the scale of government purchases might differ, the underlying market psychology remains similar. The perception of large-scale institutional demand, whether from corporations or governments, often translates into upward price pressure. This price-pumping phenomenon is not unique to Bitcoin. Government policies and announcements frequently impact asset prices across various markets. However, the relative novelty of Bitcoin and the cryptocurrency market, coupled with its inherent volatility, amplifies these effects. While government purchases can contribute to short-term price volatility, it's crucial to distinguish between short-term market reactions and long-term price trends. The cryptocurrency market is driven by a multitude of factors, including technological advancements, regulatory developments, macroeconomic trends, and investor sentiment. Short-term price movements are often driven by speculation and news events. The entry of a government into the market can trigger a flurry of activity from traders seeking to capitalize on the resulting price fluctuations. This can create a self-fulfilling prophecy, with traders anticipating government actions and positioning themselves accordingly, further amplifying the price impact of these actions. Long-term price trends, however, are influenced by more fundamental factors, such as Bitcoin's adoption rate, its use cases beyond speculation, and its integration into the global financial system. While government purchases can contribute to increased awareness and adoption, their impact on these long-term trends is less clear-cut. Furthermore, the scale of government purchases relative to the overall Bitcoin market is currently relatively small. The total market capitalization of Bitcoin is vast, and government holdings represent a small fraction of this total. As such, the price impact of government purchases, while noticeable, may not be sufficient to fundamentally alter Bitcoin's long-term trajectory. The short-term price volatility induced by government actions presents both opportunities and challenges for investors. Traders seeking to profit from price swings might view this volatility as an opportunity to buy low and sell high. However, this approach carries inherent risks, as predicting market movements with accuracy is notoriously difficult. Long-term investors, on the other hand, might be less concerned with short-term price fluctuations. They often view Bitcoin as a strategic asset with long-term growth potential. For these investors, the key is to maintain a disciplined approach, avoiding emotional reactions to market swings, and focusing on the fundamentals driving Bitcoin's adoption. Dollar-cost averaging, a strategy that involves investing a fixed amount at regular intervals regardless of the price, can be an effective way to mitigate the risks associated with volatility. This approach ensures that investors buy more Bitcoin when the price is low and less when the price is high, averaging out their cost basis over time. It's essential for investors to recognize that the cryptocurrency market is still in its early stages of development. As such, volatility is to be expected. Understanding the factors that contribute to this volatility, including government actions, is crucial for making informed investment decisions. Beyond the direct impact on price, government involvement in the Bitcoin market can have a broader psychological effect on investor sentiment. Government endorsement, even if limited to holding Bitcoin as a reserve asset, can enhance the perceived legitimacy of cryptocurrencies. This increased legitimacy can attract more institutional investors who might have previously been hesitant to enter the market due to regulatory uncertainty or reputational concerns. As more institutional players enter the space, they bring with them their capital, expertise, and networks, further fueling the growth of the cryptocurrency ecosystem. Moreover, government involvement can spur innovation and investment in the broader blockchain industry. As governments explore the potential applications of blockchain technology in various sectors, they create opportunities for entrepreneurs and businesses developing blockchain-based solutions. This, in turn, can lead to job creation, economic growth, and technological advancements. The psychological impact of government involvement should not be underestimated. While price is a tangible and easily measurable metric, investor confidence is a more nuanced and yet equally important factor in the development of any emerging asset class. Government actions in the Bitcoin market are closely watched by investors and industry participants alike. While the short-term price effects might grab headlines, it's crucial to consider the broader implications for investor confidence, institutional adoption, and the long-term trajectory of the cryptocurrency market. Bitcoin's long-term value proposition rests on two fundamental pillars: scarcity and adoption. Its limited supply, capped at 21 million coins, ensures that it cannot be devalued through inflation, unlike fiat currencies. This scarcity, combined with growing adoption, underpins its potential as a store of value and a hedge against monetary debasement. As governments accumulate Bitcoin in their reserves, they effectively reduce the circulating supply available to other market participants. This increased scarcity, if demand continues to grow, could exert upward pressure on the price over the long term. The logic is straightforward. When something becomes more scarce and more desirable, its value tends to increase. Moreover, government involvement in the Bitcoin market can act as a catalyst for broader adoption. When governments recognize Bitcoin as a legitimate asset class, it enhances its credibility and encourages businesses and individuals to consider it as a viable alternative to traditional financial systems. This increased adoption can create a virtuous cycle. As more people use Bitcoin for transactions, remittances, and savings, its utility grows, further increasing its value. This network effect, where the value of a network increases with each additional participant, is a powerful force that could drive Bitcoin's long-term growth. The role of reserve currencies in the global financial system is undergoing a period of introspection. The US dollar's dominance, while still significant, is being challenged by geopolitical shifts, technological advancements, and the emergence of alternative assets like Bitcoin. Some analysts believe that Bitcoin, with its decentralized nature, scarcity, and global accessibility, has the potential to disrupt the existing hierarchy of reserve currencies. If governments were to diversify their reserves away from the US dollar and towards Bitcoin, it could have profound implications for the global financial system. A shift towards Bitcoin as a reserve asset could reduce reliance on the US dollar, potentially leading to a more multipolar world where multiple currencies and assets compete for reserve status. This could have both positive and negative consequences, depending on how the transition unfolds and the stability of the emerging financial order. However, it's important to note that the path towards Bitcoin becoming a major reserve asset is fraught with challenges. Volatility, regulatory uncertainty, and the need for robust infrastructure are significant hurdles that must be overcome before Bitcoin can achieve widespread adoption as a reserve asset. The future of money is likely to be more diverse and dynamic than the current system dominated by a handful of reserve currencies. Digital currencies, including both central bank digital currencies or CBDCs, and decentralized cryptocurrencies like Bitcoin, are poised to play an increasingly prominent role in the global financial system. Governments are closely watching these developments, exploring the potential benefits and risks of digital currencies. Some are developing their own CBDCs, seeking to maintain control over their monetary systems while embracing the efficiency and innovation of digital currencies. Bitcoin, as a decentralized and borderless currency, offers a different value proposition. It provides individuals and businesses with an alternative to government-controlled currencies, potentially fostering greater financial inclusion and reducing reliance on traditional financial intermediaries. In a multipolar world of currencies, Bitcoin could coexist alongside CBDCs and traditional fiat currencies, each serving different needs and preferences. Competition between these forms of money could drive innovation, improve efficiency, and provide individuals and businesses with greater choice and control over their finances. The transition to a more diverse and digital-centric financial system is likely to be gradual and complex. Governments, businesses, and individuals will need to adapt to the evolving landscape, navigating the opportunities and challenges presented by this new era of money and finance. The entrance of governments into the Bitcoin market marks a significant turning point in the evolution of finance. This move goes beyond mere investment. It signifies a growing recognition of Bitcoin's potential to reshape the global financial system. Bitcoin, born from the ashes of the 2008 financial crisis, represents a fundamental challenge to the centralized control that has long defined the world of money. What began as a fringe experiment championed by technologists and cypherpunks has evolved into a global phenomenon, capturing the attention of institutional investors, corporations, and now, governments. This growing acceptance underscores the transformative potential of Bitcoin and its underlying blockchain technology. We are witnessing a paradigm shift, a move away from centralized control and towards a more decentralized, transparent, and accessible financial system. The motivations driving government adoption of Bitcoin are multifaceted. Some see it as a hedge against inflation, seeking refuge from the debasement of fiat currencies. Others view it as a tool for financial inclusion, aiming to empower the unbanked and promote economic growth. Still others are drawn to its potential to challenge the existing global financial order, reducing reliance on the US dollar and fostering greater financial sovereignty. While the potential benefits of Bitcoin are undeniable, the path forward is not without its challenges. Volatility remains a primary concern, creating uncertainty for investors and policymakers alike. Regulatory uncertainty further complicates matters, as governments grapple with how to classify and regulate this nascent asset class. The environmental impact of Bitcoin mining, particularly its energy consumption, has also drawn criticism. Addressing these concerns will be crucial for ensuring the long-term sustainability and viability of Bitcoin. Governments, businesses, and individuals must work together to develop innovative solutions that mitigate the environmental impact of Bitcoin mining without stifling its growth. Despite these challenges, the momentum behind Bitcoin is undeniable. Its decentralized nature, scarcity, and global accessibility have captured the imagination of millions, challenging long-held assumptions about the nature of money and finance. The entry of governments into the market adds further fuel to this fire, signaling a growing acceptance of Bitcoin as a legitimate asset class. Navigating this uncharted territory will require careful consideration, adaptability, and a willingness to embrace innovation. Governments, businesses, and individuals must work together to develop frameworks that foster responsible innovation while mitigating risks. The stakes are high, but so too are the potential rewards. The future of Bitcoin, and indeed the future of finance itself, is inextricably intertwined with the actions of governments. Their policies, regulations, and investments will shape the trajectory of this emerging asset class, influencing its adoption rate, its integration into the global financial system, and ultimately, its long-term value. A world in which Bitcoin plays a central role in the global financial system is no longer a far-fetched idea. While the path ahead is uncertain, the potential impact is undeniable. Bitcoin has the potential to democratize finance, empower individuals, and foster greater economic freedom. It also has the potential to disrupt existing power structures, challenge the dominance of traditional financial institutions, and reshape the global balance of power. Whether Bitcoin fulfills its transformative potential remains to be seen. The decisions made by governments in the coming years will play a pivotal role in determining its fate. One thing is certain, the world of finance is undergoing a period of profound change, and Bitcoin is at the forefront of this revolution. The future is unwritten, but one thing is clear, Bitcoin has already left an indelible mark on the world, and its story is far from over.